Okay, everybody, it is Friday, June 15th, and it's just a little bit after 3 o'clock Eastern Standard Time. I wanted to get this weekly wrap-up onto the website a little bit early today so I could go ahead and enjoy my weekend, and so you can check this out before this evening. One of the things that I see at first, and keep in mind that we're looking at the daily or the weekly chart here, is that there is a definite resistance area from in the past right here. And as we start to look forward, you can see that the market tried to break through with some momentum. There's a week of follow through, but then take a look at what happened when the market did start to spike up. You had 3 weeks in a row where the market tried to go higher, and again. So 3 spikes upward and 2 lower closes. Okay, this indicates that there's not any buying interest here. So you can see that although the market did manage to break above this prior resistance area here, that really there wasn't very much in the way of buying interest. And you can see the market is now started to come down. Well, now what we need to do is look again to the left and see if the market is nearing an area of support or resistance. You can see I've taken the liberty of drawing a couple of dotted lines across the chart. The first one is at about the 97.30 level. And as you can see, the 97.30 level has had quite a bit of action. We've got a week here, 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 and here, where the market definitely reacted at this level. Again here, and then 2 more weeks here where the market has reacted. So there's definitely something about the 97.30 level that has caused some resistance in the past. Now, one of the things that you have hopefully gleaned from these weekly wraps by now is that even, although I do use technical trading tools, I back those technical trading tools up with just common sense and logic. And one of the things that you've got to consider about price is this, especially when we're looking at a weekly chart. When you see a weekly chart or a weekly bar end at a certain price over and over and over, you have got to say to yourself that for some reason 97.30 is a level that traders have a hard time buying the pound. Now, once price breaks through that, especially with this kind of momentum, that's when you have to start considering that now this 97.30 level might wind up being a support level. Why is that? Simply put, it's because the thinking in the professional trader's mind has changed. I mean, believe me, if traders thought that pounds were worth less than this price where it reversed, this market would have continued going down. The same thing up here. If traders would have thought that pounds were worth more, 1 pip more than this price, this pound would have kept going up. You can bet your bottom dollar about that. So now that price is coming back down to this 97.30 level, we've got to keep our eye on the market and keep our awareness tuned in for signs of buying. Now, how are you going to see the signs of buying? Well, one way to do it would be to look at volume. Since not everybody has volume, not everybody subscribes to eSignal to get multiple market makers volume. I really don't want to deal with that here. But if you do subscribe to eSignal and you're looking, what you want to look for is a spike in volume, especially on this week here. And if you see that there were large spikes in volume with the market going down, that's your first clue that there may be professional buying going on. And the reason for that is very, very simple. I mean, think about it. If most professional traders are planning